I think it's like Kenya's favorite president beer. Yeah, I'd say that. Yeah, the president we like the most.
Making jokes right now? Is it gonna take a while before you start?
No, it's not gonna. But like, I'm just explaining why I like White Cup. It's like as Kenyans, always as Kenyan aware. So as Kenyans, the president we've had that we like the most used to drink White Cup. So I'm drinking White Cup like that president today. Yeah. Anyways, that's the deal.
Okay, Zach, I think we can start.
Yeah, cool. Hi everyone. It's a pretty good. I'm Zach, I think, and we're joined with Duncan and Vincent and everyone on Instagram Live. Thank you so much for making the time to be here today. So we have this thing where we've realized that we have a governance problem in most of the, I'd say, we have a governance problem in our lives. We have a governance problem in places where we work, and we're trying to establish a new model of governance. And the way we're doing this is by realizing what governance is and how we're going to approach it for those people who are joining the first time. So the kind of thematic way of approaching this would be to realize that we've had a few talks as a private group for a while. You're welcome to join. I'm sure Duncan will leave links and post links, and Carla can post links to on Instagram for whoever's watching on how to join us and be part of the discussion and be part of like the discussion where and how to do these things. As we've discussed things for months and months, we've come about to realize that we are actually in search of a governance solution, and that led us down the kind of like rabbit hole of looking for the most effective ways of governance. And one of the things we realize is that it's really effective to apply governance using how do we call it? Currencies. Currencies are a really effective tool when it comes to applying governance, because a lot of people have to play by the rules of currencies. A lot of people have to play by the kind of like currencies are the rules that are set forth by currencies are almost inexplicable. So it's been like a journey of discovering what currencies are, how they came to be, how they function, and how we can apply them in digital and in analog ways to be able to achieve the kinds of how do we call it, governance we want to achieve. And today's is the second part in a series of blogs. I don't know how many they're going to be. Today is the second part in that series. And today we're looking at asset classes in today's money. We're basically going to break down money and find out all the kinds of money that exists today and understand them. And again, I'm going to say this is an effort to understand money, which is in an overall effort to understand currency and how it's used as a tool of governance. Okay, so I'm probably going to list out the things, and then I'm going to kind of like explain each one of them. We have a few classes in today's money. We have things like credit markets. We have things like I'll explain what each one of them is after. We have things like credit cards, and we have things like your savings, which is actual money. We have things like your credit score, which also can be used as money. Then we have things like currencies, which is what we understand as money, kind of, and what we use extensively. And these are the asset classes in today's money. And what I'm going to do is to attempt to explain and have a discussion of my understanding of these things in an effort to reveal how money as a system works, which is also in an effort to reveal how money is used as a tool of governance. Cool. So let's dive into credit markets. Credit markets are tools that kind of have been built with the age of computers. So it used to be like banks had to banks took advantage of having the monopoly of financial market information. Banks used to know who has taken the biggest loan, or who has the best like credit history, who pays their bill the best. And because they knew this, they could build businesses businesses around organizations and individuals, knowing that this person is this kind of person when it comes to money. But then with the advent of the computer, which is in 1986, 87, somewhere there, we started seeing changes whereby information like this became more available. So right now, your government has your credit record, your cell phone provider probably has your credit record or a form of your credit record. Each of your banks where you have an account has a credit record. And this builds a market of like people wanting to know other people's credit records. And this is because people want to buy houses, people want to take loans, people want to appear credible for employers that they're working with, people want to appear credible for, say, they're people who want to handle money. And this makes something called like a credit market. And being able to share and exchange this financial information, especially as applied by the computers or as built by computers, makes a market that makes a form of money. Basically, knowing people's financial information or knowing the market information, knowing who is reacting to what, who would react to what, who's holding what, and they would react this to that, makes an asset class. Basically, that kind of knowledge or information makes something that's called a credit market. And then, but beyond that, we have something that's called credit cards. And the credit card actually really started out as a very simple tool. It started out as your basic, I would say, loyalty card. Like right now, for those who are in Kenya, you know about like your Nakumat card. I keep saying Nakumat, Uchumi. Uchumi is also there. Maybe your Carrefour card, or like your Tuskys card, or your Naivas card. These are loyalty cards. They prove that you've been to this shop and you've spent this much at this shop. Credit cards were started out as oil companies in the 60s or 70s in the US, and it used to prove that you've spent this much money on fuel. It was actually built around encouraging people to use more fuel in the US, because this is one of the linchpins that they use as the driving force for the economy. And slowly, this kind of like, because I have spent so much on X, I get so much Y, and I can use Y to buy W and E and whatever. Basically, if I get enough Nakumat points, I can go to Nakumat and buy a car and buy a TV. Or if I get, for those who are in South Africa, maybe if I get the right ShopRite and enough ShopRite points, or if I get enough Woolworths points, I can go to Woolworths and buy. Actually, I should use Woolworths. Everyone has Woolworths. If I get enough Woolworths, you can go and use Woolworths points to buy. So that's kind of what credit cards are based on. It's oil companies that develop them, but slowly it became that banks gave them out. They gave them out based on how much money you had in your account, how much money you use, how responsible, how much you earn. But this is something that was actually abandoned because banks started becoming more financial service providers rather than giving people credit cards so that they can spend money before they earn it and then paying it back. We will, in another maybe blog or something down the line, we'll realize why banks do this. I'll try and explain it cursorily today, so that because we actually have to go through things more than this. And then another asset class in today's money is your savings. Your savings is going to be like any liquid cash you have. You have money in your account, you have money in your mobile wallet, you have money in your, say, cryptocurrency wallet, any kind of money you have put aside that you can use for something. This becomes an asset class. However, a lot of people have stopped using this. Why? Because money itself it's a good form in exchanging value. If I want something from you, it's good for me to have money, but it's not good for me to have money if I want to keep my wealth. So at best, it's sort of like a temporary store of purchasing power that you get to use in the period between when you're paid and when you spend the money. But mostly, money is not a good place to keep. It's an asset class. It's good. You can't have money. It's an asset in itself, so that it stands by its own right. But having just money all the time is not the safest procedure or the safest way to be, because money also appreciates and depreciates really quickly. This is something we'll learn more about as we kind of figure out other things, volatility and how reactive certain instruments are to the markets and to what is decided. These are all things that determine whether an asset class is good or not, but more on that later. And then we have scorecards, and scorecards are kind of like, basically, this is information showing how parts of the world have kind of like performed. So you want to show this because of inflation. And inflation comes about because we have central banks. And we'll explain this in maybe the next blog, where we'll go through a glossary of money, because now we're running into many terms that mean things and people will want to understand. But so central banks decide when to produce more money or reduce the money in circulation. Producing more money and reducing the money in circulation causes things like, partly cause things like inflation and deflation. And these are things that, if you have a scorecard, if you have a list of all the inflations and deflations for the rest of the world, you can easily make bets, use this information to kind of better your financial being. So it also becomes like an asset class. If you think about, say, the Bank of International Settlements, BIS, it's based in Switzerland, I think. And they have a lot of information about what money is going into which country and coming out of which country, and how which country has what amount of their own currency, which means they can sort of determine what kind of inflation your country is going through, and how much money you're getting and how much money you're giving out. And this gives them some sort of power, because they know this. Information in this age can be used in such a way that you can leverage information so that you can use it. You can basically use information as a currency, as a purchasing power, as a governing power. If you know who is in debt, you can put everyone who is in debt aside. So that almost gives you a governing power. So, and then this kind of boils down to, look, we don't think about it, but our countries own real estate, our countries own things like bonds, our countries own things like stocks. And knowing who has the most amount of gold or the most amount of silver or the most amount of oil gives you some sort of power, and this becomes an asset in itself. And then what we get to the most almost obvious assets that people are known to have right now, and these are currencies. And currencies it's tricky because currencies are of many types. So we have real estate as a form of currency. Basically, any asset you have that you're holding, including all of those that I've mentioned before, any assets you have that you're holding that you can use to acquire more assets, these assets become an asset class. They all become a currency, because yes, I own 5 houses. I can decide to use my 5 houses that I own right now to go and buy a plot or something, or however way. So it's almost malleable property. It's confusing and maybe not very direct, because I've mentioned 3 asset classes, and then on the 4th one I've said currencies, and it seems like the currencies includes everything I've mentioned. It almost is like that. This is almost the situation that we are in at the moment. And so I'll quickly run through the list of them. We have real estate, and real estate has been a currency since times when people could plant. If you could plant, you could rent out land. And this became a currency. You had power. You had purchasing power because you had a lot of land, and people could come rent land from you and plant their barley and go sell it at the market. Stocks. Stocks has been currency since people could make agreements, because then you could own shares of a company, you could own parts of a company. You didn't need to own all the company, but you could own parts of it. And then we have another asset class in currencies that's called bonds. And the bonds are loans by government, by central. Okay, this is a tricky one. Bonds is a loan to an organization on whose behalf it is issued. So if your government issues a bond and you get involved in that bond, say you buy some shares or some parts of that bond, you're giving a loan to your government. If your company issues a bond, say you work in a big company like KPMG, Deloitte, those size of companies issue bonds. If you buy those bonds, you're basically giving you're giving cash to the company in exchange of future profits or future results of some sort of project. They could be building a road, a railway, planting maize. It really varies. It's as wide as the world is as wide. And then we have currencies. This is confusing because I'm mentioning currencies in an asset class called currencies. But if you think about it, all the monies in the world. So if you're a South African, you use rands. If you're American, you use dollars. If you're a Kenyan, you use shillings. These are all currencies. And then there's also, if you have gold, if you have Bitcoin, if you have silver, if you have oil, all of these things are currencies. Bear with me. I know I'm mixing a lot of things, and I know this is kind of the nature of it. So it takes a while to intuitively understand how money works. And I'd ask you to come to more sessions to get them. And bear with me. So I'd say, the currencies become an asset class because historically, banks and financial markets have access to this. Last week, we spoke about how fractional reserve economies came to be. And this is by the people who have the gold giving more loans than the gold they own. And because you have that form of information, they make the gold that's being given out. The information about the gold being given out is a currency. The gold itself being given out is also a currency. So you have to realize the person who knows where all the shillings are and how they're divided in the country, that's an asset to have. And also having the shilling itself, knowing about the shilling is an asset, and having the shilling itself is an asset. And when we say currencies, then we mean that all the monies in the world, all the monies that people can use, real estate, gold, and all of those things are an asset class in today's money. And how do all of this intermingle? Almost a very big percent, almost 100% of the market trading that happens on our global forex market, which is our foreign exchange market, that's why it's called forex, is most of it, very little of it is due to purposes of exchanging goods and services. More than almost 90 or 95% of it is because of speculation. It's a casino. Most people are betting that, the dollar is going to become more expensive, so I buy more dollars, or the rand is going to become cheaper, so I sell all the rands I'm holding. And whereas speculation can play like a positive role in most markets, the levels today are very out of balance. That's why we have the kinds of volatilities we had. Like, say, think about it. If you're old enough, you do realize, like, ever since 1971, there's almost been an economic crisis. Like, I think in the 70s, it was when the dollar was disconnected from the gold standard. That caused a bit of stuff. And then in the 80s, there was a lot of people participating in financial market, which also built like a tulip kind of phase where people bought into a lot of things. It's almost like the dot-com bubble. I think in the 90s, we had the Asian crisis and the Mexican crisis. And of late, they're coming like every year, like ever since like say 2000, they're coming every year. Like there was a Russian one the other day. Right now in the world, we're going through like a Venezuelan crash. Like there's so often these days, it's almost like we're seeing a systemic failure of the system of money. Or I shouldn't use system when I'm discovering systemic, but we're seeing systemic failure in the thing that is money. Okay, and why is this? Because most of the world is built around speculation. We're all buying dollars thinking dollars are going to be expensive, or we're all selling shillings because shillings are becoming cheaper. But we speculate because it's a function of the free market. When we join the free market by like decoupling the gold from the gold bullion from the dollar, we almost made it that market forces decide how much money is available. But then in some sort of weird, very odd way, we ended up going with the most evil market sources, which was everyone who made a lot of money. The 90s, the 80s was a lot of speculation. It was all betting. It was just a big gamble. Like that's not cool because we made a lot of money out of nothing. And now we have nothing to back it up. And a lot of people are in debt because, it was just a gamble. I betted, And to get a sense of, so like these like the speculation, why did people speculate? In 1971, the dollar was disconnected to the gold, and this led to currency fluctuation. And then in the 80s, a lot of people joined the financial market because of the 71 gold and bullion disconnection. I mean, gold and dollar disconnection. And then the technological shift. Just because computers were made and people could access more information about technology, people ended up running 24-hour markets, and it just made people speculate way more. And if you want to get a sense of how much the third one affects the world, you have to think about that. It's okay. You have to think about that. For the last 5,000 years, this financial system that this world is running on has not changed, and like money has remained the same, like except for technological innovations, money has been the same for the last 5 years. But now we're entering a world where it's suddenly very convenient and very easy for you to build your own currency. And now suddenly it's a problem because money used to hold all the power, but the people with the power of making money used to be very limited. Okay, now with cryptocurrencies and the internet and whatever happened in 2009 and Bitcoin, everyone can make currencies freely, easily. In 15 minutes, I can make a currency. I can make a money right now. As long as I can convince people to use it, it's valid, it's usable, it's never going to be killed. And this is going to cause like a big titanic struggle, which is already in process at the moment. And this struggle is almost why we're having this meeting. There's a big struggle at the moment in the world. And the big struggle is who is going to get the right to make and distribute money? Because it started out as, say, the farmers who had the biggest lands. This is in Abyssinia and Mesopotamia. The people who had the biggest lands could rent out the biggest real estate, could give coins. And then we went to goldsmiths, and the goldsmiths were, before we went to the goldsmiths, it was a church. The church had the most gold, and the church could this was the period of the world where we had the Crusades, because the Pope ruled the world. The Pope could decide how much currency was in circulation. The Pope could give out as much currency and whatever. And then after the church, we went to a nationalistic order, which is why I'm wearing my Kenya flag. Obviously, we went to a place where we are very affiliated with your currency, with your country, But being affiliated with your country means being affiliated with your currency. It means this is the currency you believe in. This is the currency you're going to use. This is the currency you're going to support. As a person, as one of the 7 billion people on earth, that really counts for a lot. And because you spend your money every day, you actually vote. The more you use your money, the more people use it, and the more your money kind of becomes alive. And now we are in a nationalistic sense. But now the thing is, now we've suddenly, since 2009, since the formation of Bitcoin, later down the line, we will learn what Bitcoin is and why it's significant. But since the formation of Bitcoin, we're now, actually it's a bit before Bitcoin, because it happened not in 2009, but in 1994, but that's not relevant right now. That's more detailed than is needed. But what happened is we suddenly had the ability of making money without the permission or the purview of our governments. Now there's a titanic struggle. There's a big struggle in the world. And the struggle is who is going to control the next emerging form of money. You know, we've been on currency. We used to be on church blessings, and then we went to nationalistic currencies. Now something else is coming. We don't know. Whoever pulls this off will earn the right to produce and distribute money. And this will be done by merit, it looks like, especially if you look at the condition of the world with the protests in the US right now. This will be done by merit. Whoever gives the most value is the one who's going to get this permission. And this is kind of the asset classes in today's money. And this is kind of why we're looking to discover and find out how money works, how you can break money down, and how you can use it better. There's two other like kind of weird assets, and one of them is derivatives. Derivatives is the ability of mixing all the asset classes into one. Basically, you can mix many kinds of risk, and then you can make a currency out of that. And then we have another one, which is countries. Countries are basically combinations of all the asset classes in a group of people. And then that group of people can become an asset class in itself. Consider something like America an asset class. I know it's odd, I know it's weird, but consider it. This is kind of the asset classes we have in today's money. And I know it's a kind of weird topic. We have 10 minutes left on this call. I'd be more than willing to, okay, we have a bit more than 10 minutes, but I'd be more than willing to answer any questions or any confusions or hear any considerations or lessons or interesting points from anyone on Zoom or on Instagram, wherever you are. Thank you all. Yeah. And thus asset classes in today's money, from Zach, from Little Kidogo. Any questions?
Thanks, Zach, for that. That was very brief, informative, and you managed to break it down in terms of how money exists as an asset. I remember when we were talking about having this as our next discussion. I mentioned that when you talk to someone about an asset, they'll always think about a physical or rather tangible kind of property, and they probably won't put money among that classification. But that was good. We were taking questions or contributions from participants. Thanks to Vincent for joining us. Thanks to Janet. And Carla, who's orchestrating our Instagram audience. Thank you all.
Yeah. So does anyone have any questions? Was it well understood or was it completely misunderstood? That's always a problem when no one has questions. You're like, did everyone get everything or did everyone get nothing? It's like...
Vincent, I think you are trying to say something.
Guys.
Okay, hello.
Yes. Hello. It's been interesting listening to Zach's rant and quite informative, I must say. And looking at assets and money in a different way, in a different perspective, as opposed to the traditional school-based way. Money, currency, and assets represent A, B, C. But now we have to appreciate that we're moving into rather a new age and a new way of doing things. And I like the perspective and the newness that you brought into it. And I'm challenged, and I keep learning new stuff, and this is good. This is good. And as much as my background is in business, uh, I was not floating at all. So I'm good. I was home. I'm just enjoying the new perspective. You brought in the new way, moving from the traditional way of looking at assets as something that you can own, that you can put attachment to. That is the traditional schooling way of being told what an asset is and what money is. Because we've come to realize that we have a lot of things in our lives that actually is an asset. It is money, just how you define it, that credit rating, that perception that institutions have of you. You can't quantify that and make it tangible, but in its sense, it is value. So I like that aspect that you brought in, and I'm good. I'm challenged, and I keep looking forward to such discussions. Asante.
Thank you so much for coming. Thank you. I know Janet always asks questions, usually, I think.
Hi everyone.
Hello.
Hi.
Sorry, I got in a little late. But I would say I'm a little bit on the advantage because I've had this talk with Zach for over a very long time. And initially, when you hear about cryptocurrency, it's almost unbelievable because, like Vincent says, it is. Money is the traditional, the pesa, the notes, the paper money, and the coins. But this is money that is not really there until it is there. And I think my experience over time has been that it is there at the end of the day. However, I have maybe something that I would wish, because Zach seems to be extremely knowledgeable on this issue of cryptocurrency. I would wish, I don't know whether it's at this moment in time or maybe later in our talk because of the time, I would wish for him to, or for anybody with expert information to elaborate on the risks, the very high risks that have appeared recently in the news about dealing with cryptocurrency. Like major losses, just like in the stock market, it drops, it loses value, and then you have people who have got so much savings. I met a friend the other day who told me that he had quite a bit of crypto, and then suddenly he found that he didn't have anything at that moment. So I wonder, if it drops and you still haven't traded, do you still have it when it peaks? Is it still yours or it's disappeared? There's quite a bit of uncertainty and misunderstanding, which maybe somebody with quite a bit of experience like Zach would shed some light on.
Okay. I can answer that. Okay, so cryptocurrencies, just like normal currencies, have volatility. Sometimes, actually, for most periods, normal currencies, actually, if you follow them daily, have more volatility than cryptocurrencies. The reason you don't realize that is because your central bank shields you a lot, because your central bank decides the value of the shilling and then kind of enforces it using market forces. We'll explore this later. But then you still have it if you own the asset. Like the problem with most cryptocurrencies is a lot of people will have the unfortunate experience of having experience cryptocurrency first as some sort of scheme of earning. But in reality, they are tools, and they can be used in very many ways. I think it deserves a talk by itself, and we can come back to this. But if it does lose value, and you owned it in the first place, you still own it, and it will probably gain value in the end. Because what usually happens is, just like the shilling, it will lose value and it will come back, and you'll still have it. You don't have to sell it. You don't really. It's like shares in a circle. Until you let go of them, even if the circle performs bad and you lose it, it will still come back. It's the same thing. Actually, shares in a circle and cryptocurrencies work completely the same way. That's what I would say. For now, for today.
So there's no loss.
Not really, especially if you invest in them. So there's people who do trading. Trading is trying to sell and buy and make profit within the same day. That is very risky, and that hurts. That, like, with all that risk comes a lot of exposure. But then there's people like Warren Buffett, people who buy and try and keep for like 5 or 10 years. Those people rarely get hurt. The ones who invest. The people who trade, the people looking for daily gains and losses, those people very oftenly will end up in very dire state. That's kind of what I'm saying. There's no losses in the short term. There's no losses in the long term as far as it's gone, because Bitcoin's graph for the last 10 years has been like this, literally. And like, if you look at your nationalistic currency, it's probably been like this. So it doesn't look that there's losses, but you do need to invest time to wait it out. And actually, you need to run investment. So whenever you're getting into a cryptocurrency, know why, have a reason, have a very concrete personal reason that you're supporting and getting into this. Don't get into it because someone got into it. It doesn't work like that, because everyone can make a cryptocurrency. They're almost like religions. You have to get in the one you believe in, and you have to have reasons for believing in that one. Yeah. That's kind of what it is.
Okay.
So maybe, sorry.
No, it's okay. It's okay. Janet, go ahead.
A quick one. So in very few words, would you say like lack of a regulator in the cryptocurrency market is maybe one of the reasons why it is a high risk area of investment? Not really high risk, but maybe that is what subjects to the risks that have been occasioned in that market.
I like that you say maybe not high risk, because lack of a regulator is both the reason you want to get involved in cryptocurrencies and also the reason you don't want to get involved in cryptocurrency. It is both the advantage and the disadvantage with cryptocurrencies. A big advantage of having lack of a regulator is you have no censorship. So there's no government that will come and take something you rightfully earned, which can happen with shillings right now. They can be like, oh, you got paid this fraudulently, but maybe you did the work, and someone can take away your money because of that, your shillings, because you keep them in a bank they control. So that lack of regulation protects you from censorship. You have your voice, regardless, you have your voice. But then also, that also doesn't protect the vulnerable, because the vulnerable can be taken advantage of, and because there's no regulator, bad people can just exist and go. But in some ways, you can see that the community ends up becoming a regulator. It's a big topic. It's almost like building a constitution. It depends on how you build it. If you build it well, it works well. If you don't build it well, it doesn't work well. That's kind of what happens with that. Does that shed more light on that? Okay.
I get your point, but all right. Maybe I can give it to the rest. Like you said, I always have questions.
No. Ask many questions. Ask many. If you're more confused, ask more questions. If you're more
I'm not
confused, ask
confused.
more questions.
I'm not
Or
confused. The story
if you're more,
continues. What?
if you're more curious, okay. If there's more questions, just keep asking them. It's fine. Because
Yeah.
the most likelihood is that the question you have is someone else who's watching has that question. So ask the question you have so that someone else gets the advantage of getting the answer. Yeah.
I got to know of cryptocurrency just how many years? Maybe 2-3 years ago.
Maybe.
But the more I learn about crypto is that the more I get into it, the more I learn that it's been there for quite a long time.
Yes, it does.
What happened? What took so long, even for somebody like me, or for somebody like Vincent, who is in the market, to really know what is crypto, how does it trade, how does it work, and how can I get it, how can I invest?
What took so long? I can give you the real reason. I don't know if it will make sense, but the real reason is that the people working on computers could not figure out how to verify that this human in particular has signed this thing. And because we could not, because all these computer engineers could not figure out how to not make, because if I can't figure out whether Janet has signed something, it means the shilling that Janet is giving to Vincent, I cannot verify that it's actually Janet who gave the shilling to Vincent and Vincent received it. So that system, the system of verifying that a human has actually signed this and that human is this person, that didn't exist. It just took so long to invent until, say, 2009. And once that existed, all the cryptocurrencies could start working now, because we could now verify which human signed this. So what human did this cryptocurrency belong to, and which human, or which, actually it's not even which human. The way we discovered it in 2009 actually enables us to go like, which thing is this cryptocurrency belonging to, and which thing is it transferring to? Say for some weird reason, you had an economic reason for your gate to pay your front door every time it was opened. Say for some weird reason you have that. It's now possible, given the technology we have today, to ensure that happens, and to ensure that the value that is going from the gate is going from the gate to the front door. Inanimate objects can own things and can be by themselves governors of the things they own, which takes us to a bit of a further, I think I've explored this with Vincent a bit offline, but it takes us to a bit of a further conclusion. This means we can separate organizations from members, and organizations can own and govern the value they have separate from the influence of their members. Yeah. This changes a lot of things. This changes a big part of the world. It basically means we can appoint a government that has its own rules and that we always obey its own rules, regardless of which citizen it's dealing with. Think about that, you see? That's kind of what happens. I don't know if it makes sense. That's why it's taken so long. We couldn't verify that the thing signing this transaction is the thing signing this transaction. We could only do that verification from 2009. And then everything else was existing before that. That's why it took
Zach, if I can just add, I'm just saying that the universal acceptability of crypto, once that is done, it will solve a lot of issues, because that acceptability, I accept it in this side of my legislation, the other guys do not. And there's a lot of mix, different culture clashes and economic situations and the status of maybe boundaries. All this acceptability is key. We need to have it universally acceptable, because there's a lot of myths and misconceptions. And I think we can deal with that when we have a topic of its own, which I'm challenging you, Zach, to do something like that.
Yeah, but so, I don't know if you realize this, Vincent, but acceptability is not a technological problem. Rather, it's a social problem. It's upon us to convince a large enough crowd to accept this currency. You see, in today's world, the way it's done by guns. Your government has more guns than you, so you shall obey them. Period.
Yeah.
You see, but in the world that we are going into, it's going to be, who can you convince to use your currency? And the moment they use your currency, they basically opt into this constitution and they can use it. So we live in this world where you and your neighbor will subscribe to different governments and it will be completely possible. I don't know if that makes sense to you. Yeah. Okay, if there's no more questions.
It does in a way. What I'm just alluding to is that there's some higher level of control that is given to us in terms of fiscal policies and things like that. So this higher level of control, one would want to control it. And that level of control is what is going to be a challenge and acceptability.
Yes, exactly. And that's going to be a social challenge, I think. I feel like. I'm not so sure. I don't know. Okay.
Political as well.
True.
Yeah.
Okay, I think we have another question from Carla's side.
I just have a comment. To someone who kind of enlightened that they just realized that, you are talking about how money works. And I guess maybe, in relation to the current discussion about crypto and perhaps the connection between crypto and money and that, money we used to, and then now you guys were mentioning politics and social in relation to the topic of how money works. How do they all, perhaps you can explain how they all fit together?
I mean, I can probably share a link to a blog that they can read, but this whole talk has been basically an explanation of how all the different assets in money connect. And cryptocurrency actually happens to be a currency. It's like having dollars or yen or shillings or rands. Cryptocurrency is just one of those other monies that can be used for disparate purposes and in disparate places, kind of. That's how it connects back to all the normal monies that we know. It's one of the normal monies. The only difference is it's a computer money. That's it. It's not like a notes money or a coins money. That's the only difference. Does that make sense? Cool. Any more questions? Discourse?
Zach, it appears that that crypto discussion will have to take a separate day to itself, It's been good to hear about the interest from everybody. So we'll plan for it in one of our coming sessions.
I think we can even probably accelerate it and do it as the next one. I think it clears, it puts aside a lot of myths. It makes a lot of things that we're going to approach, even though we could have approached it later. Clearing it now removes a lot of like social and political things, barriers to access and to kind of accept this. So I think we can do it as our next session. It looks prudent. A lot of people are talking about it. Every question has been about it. It's good enough. I think we should do a session about it and kind of like explain it and try. We can probably even, I can see if we can show creation and using of one. It's very straightforward. I'll try and make it so that we can show and present how we make one and use one. And in that meeting, we'll make a cryptocurrency and use it and end up using it and end up having questions about it. So Duncan, does that? Yeah, Duncan.
Yeah, cool. Actually, that is fine. So next Friday, same time, we'll have the crypto discussion.
Awesome. I'm happy for that.
Okay, so from Zoom, I don't believe anyone else has a question. Carla, from your side, you good?
We're good. From this side, it's good.
All right. Thanks so much, Zach, for that. Any parting shot or last words from you?
Be courageous, and for the ones who do not try, they don't earn. It's really, we're in the middle of a paradigm shift, and like you can apply every sense and reason, and it will still make sense at the end of this story. I'd just like to encourage people to be as courageous as they can, be true to yourself, believe in what you do, and I believe we'll win, always.
All right, thank you very much. We'd like to close the meeting at this point, and thank you everyone for joining. Perhaps you can take the coming week to prepare any questions you had in mind regarding crypto, so that we can really explore this exhaustively. So thank you everyone for your time, and see you again next week.
Okay.
All right.
Thank you.
All right. Thank you. Bye.